Does sterling on sale mean we should buy a house with it? We are speaking this morning to the real estate expert Henry Faun of Knight Frank to find out what the new occupants of two very well-known houses in the UK, number 10 and number 11 Downing Street, could mean for the country's property market. Henry, it's lovely to see you. Thanks for joining us.
Brandy, good morning. Pleasure to see you.
So let's start with the new Prime Minister moving into number 10 with the packing boxes. She brings a promise of sorting out the energy mess, tax cuts, and more economic support packages as she inherits about 10% inflation. What could that mean for the British property market?
Well, I think we'll all agree that Liz Truss has got a lot on her workload coming into that job. She's moving into number 10 or perhaps even the flat at number 11 this week. So we'll see how she gets on. Her policies will be announced. Now, there's a few things that are on her agenda which should be discussed initially. Tax cuts, as you mentioned. That'll be key, not just for real estate, but the wider economy of the UK, to see how that benefits people to curb that cost of inflation and the money coming out of their pocket.
Tax cuts, though, often lead to higher inflation because you have more cash. How's that going to be good?
And many across the board have already stated that yes, you cannot have tax cuts on one hand, and does that mean that interest rates will have to be pushed up even further to counteract that, Brandy?
And higher interest rates for the property market?
Will certainly have a knock-on for that, especially for those in owner-occupier and floating mortgage rates that haven't got them fixed.
Who's the more important character when it comes to real estate in the UK at the moment? Is it Liz or is it the new neighbour Kwasi, the Chancellor of the Exchequer?
Both are equally important. Now, the Chancellor will have more of a steer on policies of the wider feel for the UK, whether it's the wider policy pieces that will help people's pockets when it comes down to it. Whether she appoints a new housing minister that will change their policies in terms of planning for building more houses, which looks like the way and the route that she'll go through is more supply of housing in the UK.
Which is one of those things, isn't it? I mean, she pledged a lot of changes to home building policy in her campaign. She's very big on seeing renters in the UK being able to buy their first house, of knocking out what she's been calling generation rent. With all the goodwill in the world, with a little bit more self-interest here in the UAE, we're more likely to be landlords back in the UK than we are to be tenants. So what could it mean for the UK landlord to my left, Mr. Richard Dean?
Certainly, if there are beneficial things, Richard, let's say, for example, if stamp duty were to come down a little bit, that could bring a lot more in terms of supply of letting properties for the rental market. There would be more people purchasing buy-to-let properties. Capital Economics recently published a bit of interesting research which suggested that if the additional stamp duty that was increased about 2 years ago now were removed, there could be an additional supply of 900,000 buy-to-let properties in the UK, which would certainly help all those both renting, but also help those landlords looking to invest in properties.
Okay, let's put some scenarios out there. What could a recession mean for the market? I think the next forecasts for GDP are actually a little bit stronger than people might have thought, but let's be pessimists. A global recession, even if not a UK one directly. What does that mean for property values? Well,
great question. A global recession and a UK recession is perhaps a very real forecast at the moment, and we'll see how that evolves in the coming few months. Now, the reality is that when we go into more uncertain and perhaps looking ahead, the most uncertain economic times that we've seen in quite a while, many people tend to pull out their investments from higher risk, high interest assets into lower risk assets. And perhaps that could be housing, it could be other low risk assets as well. So it could be perhaps that buy-to-lets could be quite interesting as an opportunity during a recession, because people still do need to rent and have a roof over their heads.
Where are we at the moment with prices with UK property, Henry?
In the countryside in the UK, prices are up year on year about 12%. They've actually just come off by about 0.1% or so in the past month, which is key to note. It's not statistically big, but certainly key to look at that and see how that progresses. In London, the central areas of London, given that international travel has now opened for the first time really fully in a couple of years, we've actually had the largest volume of agreed sales last month that we've had in 10 years, which is phenomenal, an even bigger volume than we had when there was a stamp duty reduction. So it's looking quite positive in London at the moment.
Well, we're going to be looking at those prices from here in pounds a little bit more favourably because of the battering that the pound has taken. How much of a factor is that for Gulf-based buyers?
For all of us here in the Gulf, with us pegged against the dollar and certainly benefiting at the moment from a very strong dollar, that does make a difference. Whether we are looking to purchase new properties, but also you could look at it the other way, Brandy. If perhaps those that have been here longer term are looking to bring money back to the UAE, it could be less beneficial. Yes, it works one way, but perhaps in reverse the other way as well.
Are you suggesting, quickly, Henry, I've got an eye on the clock, that the UAE property market might be the loser if people are selling in the UK but not getting the same gains here because our property effectively more expensive?
I couldn't say on that one what's a winner or a loser, Brandy, but certainly there is a good positive outlook if you can buy and also have a good currency play in the opportunity, whatever the asset might be.
Which then we start talking about expat mortgages, don't we? I mean, are we seeing a rise in people taking dollar-denominated mortgages here to spend overseas? What's your gut sense on that? I've got 1 minute left with you.
Sure. Most of the time for UK property specifically, we have UK banks or even a Middle East bank that are securing the property in pounds sterling. So there is no currency risk associated with buying that property in the UK.
You say risk, I think arbitrage.
Perhaps.
Henry Faun of Knight Frank speaking to us this morning.